Okay, welcome members. We are live on YouTube Live for this weekend edition of our training session. Again, there's always going to be about a 15 or 20-second lag with YouTube Live. So once you see this message, and I just want to verify that you could see me and you're all good with audio, go into the comments and say hello. Happy Saturday. And I will be happy to post your comment on here. As a matter of fact, let me say that right now. And awesome. So go ahead and say hello and welcome if you are here watching the live stream for the members only training today. And if you are going to watch this on the recording, well, you can always definitely still put a comment in there, as well. So let me change this wording here. So today I'm going to kind of wait a few seconds, see if anybody else is going to hop in today's session. But I want to focus in on lot size and risk management. Tons and tons of questions that we have. Hey, good to hear there. We've got, yes, sir. Hello, Liberty Wolf. Good to have you here on the live session. Hello, hello. Yes, good to be back from travel. And we got school starting this week for kids. So it'll be a busy morning for me getting our youngest over to school, middle school this year, but exciting times as well. So again, welcome and welcome. Thanks for being here. Let's give a shout out to Mr. Alex Santana. Welcome. Glad to have you here. So I'll kind of be monitoring two screens. As the comments come in on the right, I'll definitely take a look over here and we'll definitely give you a shout out. And please use the comments section to ask questions as we go through. This topic, I think, is so important that we want to cover because I have so many people messaging me saying, I this trade and that trade. And I think the goal of this is how do we stay in the game? Okay, how do we stay in the game? Hello, Izza. I hope I said it correctly. Hello. Welcome. So again, how do we stay in the game? Alex, I appreciate that, man. I appreciate that. Hey, listen, just a real quick shameless plug, right, before we get started. Listen, I hope you're getting value, and we're just kind of getting started. I don't think you're going to find anybody else who's willing to dedicate the time that it takes to have the Telegram, do these lives once a week, put out some trade opportunities during the week for $5 a month. Right? That shows you how committed I am to just trying to be able to give people value, right? I'm not going to be right all the time. I'm not going to be perfect all the time, but I am going to be authentic and I'm going to be genuine all the time. And that's pretty hard to find nowadays. So again, I hope that you could help me out. I would love to see a community of 100, 200 people on here, share my page, share my videos, get people to come in here. But I'll do this with, 5, or I'll do this with 5,000. Right. But again, I hope you're getting value again for the cup. I'm going to make sure that you get your $5 back a month. Right. And then after that, you're all profit. Okay. So again, thank you. Thank you so much for being here. I appreciate your kind words. Another comment from Alex. I appreciate you, man. I do this because of you guys. I had a super nice comment that I was going to bring up on the screen, but I'm pretty humble when it comes to that. But I just kind of recap where somebody put in one of the videos this week that they've paid thousands of dollars for Discords and private training courses. And in that last 20-minute Sunday crude oil video, they got more value than they had ever received from anybody. Because everybody just wants to make a quick buck, give you some info, and maybe never be heard from again. Stay here. We're going to keep doing these sessions each and every week, along with some stuff maybe in the middle of the week. Again, my goal is just to give you value for a small price tag, just enough to keep you coming back, right? To get your $5 worth each and every month. So thank you so much that you're here. Going through a couple comments. Yeah, this is no fluff. This is no hype. I'm not going to show you Lamborghinis because I don't have one. I have a Mercedes, but I don't show you cars. I have a nice house with a look overlooking a pool and a lake right over here to my left. I'm not going to show you that. This is about coming in here, learning. I want you to all be doing this 5, 10, 15 years down the road, whether that's for extra money, whether that's for full-time money, whatever your goals are. That's why I'm here. Okay. I've got sisters that do this. I've got neighbors that do this. Some use it to pay their electricity bill. Some are using it to pay their car bill. Some are using it for vacation fund. Some are using it for college fund. Whatever works for you, that's what I'm here for. Okay. And I think that's also important. So I appreciate that. Let me get through the last couple comments. Yes, you're welcome. You're welcome. And then let's get into risk analysis. So guys and ladies, lot size is so important. Okay. So I'm going to kind of use this window right here, and I want to come up with a different text. And I think this is so important that you should remember. If you want to stay in the game, I believe this is essential. Okay, this is essential that you trade a 0.01, which is the equivalent of 10 cents a pip, okay, for every $100 in your account. Okay, and then of course we're going to kind of do the math there as we go. If you do this kind of stuff, you are going to be a lot more successful, and I'm going to show you in a minute why this will help you as you grow your account. So what I want to do is just by you putting a number 1 in the chat, if your account is less than $1,000, so if your account is less than $1,000, put the number 1 in the chat. If your account is less than $1,000 right now, put a number 1 in the chat, because I want to kind of see, I want to really talk a little bit more and deeper into risk management. So if you have an account that's 1,000 or less, put a number 1 in the chat. I'm going to kind of make this here bigger for a minute so you can see it, okay? Because that's the folks that I want to talk to. You see, most people are going to quit. Most people are going to quit within that first, they go 100, they blow 100, they blow 200. But it's folks in that first 3 to 6 months, if they get a bad taste, they end up quitting on this. And I don't want you to quit on this. So if you have more than $1,000, and I assume nobody's put a number 1 yet, so that's awesome. But the same rule applies. Okay. So for every 1,000, just as a rule of thumb, and I'm going to show you why, because I'm a conservative trader, right? You should be between, let me get rid of this. Let me get back into this text box. Okay. So for every 1,000, you should be between a 0.10, okay, and a 0.30, except for indices. Okay, except for indices. So what does that mean? That means US 30, Dow Jones, which is US 30, S&P 500, the NASDAQ. In my opinion, you need at least $1,000 or more to have one trade set up for that. Okay, to be able to have one trade set up for that. So if you are trading the indices, if you are trading any of those high volatile pairs, and you have $1,000, $2,000, one trade at a time, and I'm going to show you some examples in just a minute, why that's so important, because we know, for example, the US 30 can move 100 points in 10 minutes, right? And so now if you are down, let's keep it simple math. If you are down $100 on a $1,000 account, you just gave up 10% of your equity. Right? And what happens to a lot of folks, I know, because it happened to me at the beginning, is you think it's going to turn around, you put in that second position, and it keeps falling. And now you are multiplying 2 positions times another 200-point drop. Now you're down $300 on a $1,000 account. Now you're down 30% of your account. You should never be down 30% on your account. This is where it takes a good mindset to say, I'd rather close that trade out. And I'm going to show you a couple of examples, and then get in at a better position. And this even goes into my man Wolf, into hedging, right? We're not going to really get into hedging today, but this is what you have to think, and this is what the banks do. And I'm going to show you some example. So if you could keep this rule of thumb here, okay, 0.01 for every $100 in your account, and then also 1 to 0.30, except for indices. So for example, if you are trading this pair right here, I had put this chart out earlier in the chat, earlier in the week. Okay, odd USD, right? If you are trading this, and I'm going to kind of take this example right here. Let's go, let me grab an arrow. Let's say that you decided to buy here. Okay, you put in for a buy here instead of a sell. Okay, you thought price was going to go up. And let me grab a square here. Okay, you thought for whatever reason price was going to go up. We've all hit the wrong button sometimes, and price goes down. Okay, and you are trading a lot size of 0.10. right? On $1,000 account. Okay. Now, as we grab our tool here and we come down, right? And you're down 60 bucks. Okay. So you are down 60. And I'm going to go full screen here in just a minute. You are down 60 bucks right now. So you went in for a 1.0 and you are down $60, right? Because you are going to use good risk management. Now, $60, okay, $60 on a $1,000 account, for example, it's not a big deal, right? I'm not going to get out of that trade yet if I believe that I made a mistake, because now I look down and I see that here was the next level of support down in this area, right? So I'm down 60 going in. Now what I could do is I can go ahead, and this is just one strategy. Again, you can close out the trade. I'm just telling you what normally I would do for these type of accounts. This is why I under leverage, because I'd rather get more bang for my buck on having multiple positions. So it's a little bit of swing trading at the same time. Now I go in for the exact same 1.0, but what I do is I increase it by 0.2. Now I go 0.12 and I enter here. Okay. And I'm going to put that here. So now I go in because I have a good understanding of the market. I know that there's a strong support level here, and I'm going to go in for one. So I'm going in for another buy. Okay. So I'm down 60, but I'm going to go in for another buy. Now, between price coming here and coming back up, because we're working zones, coming back up to my zone, let's be conservative. I'm not going to overextend it. Let's just go to the bottom of the zone, right? We've made 56 pips. Okay, so now we've made 56 pips. So now let's grab here, and we're at 0.12 times 56 equals, and I'm going to go to my calculator real quick here on my phone because I'm not the sharpest tool in the shed when it comes to fast math like this. 0.12 times 56, and okay, so $1.20 times 56. So now we are up $67.20. So now we have basically, right, at the bottom of this trend line right here, right, we even got in a little bit higher, but at the bottom of this box, okay, at the bottom of this box, we took another here because we under leveraged. We got out here, okay, we got out somewhere, whatever it was here. We are up. Even though we were down 60, we're just going to call it, we're at the break-even point, right? We're at the break-even point, okay? So you were able to kind of hedge your trade in the same direction. This is kind of like same directional trading, right? And then saying, okay, I've made up what I lost, but because you under-leveraged, you had the opportunity, okay? You had the opportunity to be able to go back in and get a second position, and now you're at break-even. Right now, it goes back to you just, making better decisions in that initial entry and saying, okay, let me see now. I'm back at this area here, and maybe you held this trade. Maybe you thought it was going to keep going long. Well, if you held it going long, right, then you're somewhere at about 83 pips, and you need to have a plan. And we're going to be talking about actually one of our next slides we're going to be doing. I'm going to be sitting with you for 30 minutes, and I'm going to have all of you write out a trading plan. I'm going to give you an example, and you're going to write your own trading plan. How many pips do you go for a trade? When should I get out? When should I get in? So I'm going to make sure that in one of the upcoming lives, because my mentor did it with me years ago, we are going to physically, you are going to come in with a piece of paper, with an iPad, with a computer, and we are going to write down and create your trading plan on a members training coming up. Okay. If you like that, let me know. Put the number 5 in the chat. If you want to do a trading plan together for you, including what you trade, when do you trade, the hours you trade, your risk management, all that, put the number 5 in the chat so I know that you are looking to get some value when it comes to wanting to have a trading plan for you. So again, I know there's a slight delay. Definitely let me know there so we can add that as well to our list of things to do. So let me get back. Awesome. Thank you. So let me get back into the full screen layout here. Okay, so that's one way that you can do this. Now, here's the problem, right? If we would have taken this exact same scenario, but you wanted to hit a home run and you decided, well, I want to hit a home run because I see everybody else on the internet hitting a home run, right? And you decide, well, I'm going to go for whole lot size, right? Now you're down 600, right? Now you're down 600. You're panicking. Your stress is high. You want to close your trade. You are having thoughts about quitting, right? If you go full lot size. And again, let me change this because actually I did this. A full lot size in most Forex pairs will be a 1.00. Okay. So now you're stressing, all because you wanted to hit the home run and you saw another video that a guy made $5, $12, $15, $80,000 on one trade, and you wanted to do the exact same thing. So your account, for if you have $1,000, you should not be trading a full lot size, right? Full lot size, 10,000 or more. Full lot size, to be conservative, 1,000 or more. 10,000 or more. Okay. So this is one way that you can mitigate it. Here's the beauty of it. Same scenario. If you only had, let me grab a brush. If your account, okay, because this happens, let me grab a brush here. Okay. If you only had $100 in your account, that's it, right? This same scenario, what happens is you should be trading a 0.01. What would that equal in this same scenario, right? What are you down, right? You're only down $6, right? But off $100, we're not bad, right? We're okay. We can sustain that, right? We can sustain that. This is why under leveraging, in my opinion, is so important. Okay. Why you have to under leverage, because sometimes we make mistakes on the analysis, right? So again, in this first scenario, you have a decision to make whether you want to, and I'm going to be giving you a calculator here in just a minute. You've got to decide if you're on the wrong side of the trade, but you went in under leverage, you can sustain it. Okay. It's when you over leverage that you send the messages. Should I close? Should I not close? What do I do? So again, under leverage, that's the way you build your account. And I'm going to show you that here in just a minute. So a couple of quick things, and I'm going to show you a calculator. Okay. Number one is, this is my, over here, if you look over here to the left, upper left, okay, this is my trading view, Papa Pips 1970. I'm going to be putting out charts through trading view. Yes, am I crazy? More value for $5 a month? Yeah, I'm going to do it, because this way I know if you're following me in trading view, then you're going to automatically get these charts. Yes, I'll put them in the chat, but you're going to be able to get a notification on trading view if you're already following any charts. What I'm going to do is I'm going to dump them like under the ideas section. So they'll come up and they'll populate, right? So for example, if you get an idea, it'll pop up kind of something like this. Okay. But it'll be just from my channel. So that'll be pretty cool as well, that we can do like that. So for example, if you look at my ideas, right, this was back from 2022 or sometime, it'll pop in like that. I just left this one as an example. And let me go full screen here for a minute so you can kind of see it. So it'll be under the ideas section. Okay. These are my ideas that you would publish. And then, for example, people could see it, you can comment. And again, I'll get notified of all these as well. So again, just another way to give you value. So if you want to go ahead and find me eventually, just write it down. Find Papa Pips 1970. That was my original name. My tag on my car says that. That's kind of when I was labeled by the folks that I was helping at the beginning, having them grab pips. You can follow this right here. Okay. And then I'll put stuff through the idea. Again, just one more way that I can give you, value. Alex, thank you, man. I appreciate that. And I appreciate that. So again, I've had people say, man, you're nuts, dude. Like, you're doing all this, man, you have spent a lot of time on this, right? For $5 a month. Yeah. That I enjoy doing it. And I think if you enjoy what you do and you have passion for what you do, I'm not worried about the money. I'm worried about the results, right? I'm worried about being able to people send me messages that say, hey man, I appreciate it, right? I made $10 today, or I made $20 today, or I made $100 today, right? Whatever the dollar amount, doesn't matter. As long as you had a good day or a learning day, then that's what matters to me. So anyways, long story short is, I'll do some analysis on TradingView because I use TradingView anyways. But what I'll do now is that I will publish them. So the moment I publish them right up here in the upper right-hand corner, you're going to be notified. Now, yeah, TradingView has different plans. Depending on your plan, you should be able to be notified. But at least you can come into TradingView and you can just go directly to my page and see if I've published any charts. That way you have another platform there as well. Okay, so that's pretty cool. Now, And if you have any questions, please drop them in the comments there. So I want to show you another chart. So I want to show you crude oil. Okay. I want to show you crude oil because yesterday you saw me type, right? I'm very authentic. I don't make anything up, right? This was the initial trade that I put out. Let me see. I got a question here. Let me get to this question and then we'll go forward. Quick question, even though you're not really covering it today, are hedges, generally speaking, a better risk mitigation than the stop loss? I would say yes. Okay, I would say yes. So one of the things, let me go over to a full screen view. One of the things that I will do when it's a very volatile market, for example, I'll use the US 30, for example. Let's say I'm down 50, 60, 80 points on the US 30, right? Let's say I put it to buy and it's dropping. At that point, I know if I enter a sell, now the most I'm going to have a gap, meaning between my buy that's losing and the current sell, let's say the direction now it's going in, right, will be that $50. Let's just keep it simple, right? So now I've hedged. So what I would do is I use the same kind of theory where I will hedge that sell and I'll keep it open. Now, let's say I'm making $20 on the sell. Now I'm down $70 on the buy. But if I see an area of support, for example, coming down, let's kind of use this crude oil as an example. Okay, let me take off your comment and let me go full screen. Let's say I use this as an example, right? Let's say I decided to, actually, let me grab a marker. Let's say I decided to buy here and the market went down, right? Maybe at, and again, actually, let me go to US 30 because it's easier the way it moves. Okay, this is a good example here. Let's say that I decided to sell here. Okay, I'm sorry, I decided to buy here. Okay, and then the market begins to tank down. Maybe here where I say, okay, I'm down 50, 60, 100 points, whatever the case may be. Then I look and I see that there is an area of support there. Maybe at 50-point mark, 60-point mark, I say, okay, I'm already down on the buy. Let me now enter a sell here. I see another candle going lower. Let me enter a sell, right? So now I'm hedging the buy, and then I've got a sell position. Then I come down here, and I see that I have, let's say I do, that this was an area of support, right, where I think it might bounce up. Now, what I will do is I will close out my sell. I'll take those profits, and then I'll wait to see what happens here. If I get the push back up, now I'm back at break even in this scenario right here because this is where I got in. Okay. If price continues to go down, then and I see, again, this is where knowing a little bit. If I see the break, and the retest, and then price continues to go down, then what I'll do is I'll get into another sell here. So now my 100-point loss is going to be hedged again with a sell. So I kind of walk with it, but I cash out at certain points. And then when I think I've hit a floor, I'll enter another buy position in the opposite direction. So for example, this would have been a good spot to enter another buy with a very tight risk, because then what I could do is I could do something like this. Let's say I wanted to take my second buy, but again, I'm not over leveraging, right? And I think it's going to come back up to these highs, right? Because we came from here. So I think it's going to come back up here, which is usually what happens, right? Now I get another buy, but I'm going to do a very tight stop loss, right? So if it does take me out of my second buy, I'm only still down on my first buy. And if I get knocked out here, not a big deal. I've already entered a sell, right? And then I've also got a buy. So now I've got two open buys and one sell. Either my sell is going to keep running and I'm going to make profit off that, or I'm going to close my sell. And now I see this bullish candle, right? And again, this is where knowing price action a little bit. Once you see this candle, you know you're good. Once you see that candle, it basically ate all these little candles, kind of like the old game of Pac-Man. For those who are familiar with Pac-Man, okay, now I know we're going to this high. When you see this candle, you already know, man, we are golden. So now you've made money off this buy. You've made money off this buy. Even if you took a short sell loss, let's say, because you closed it, you're still going to be up between the three trade opportunities. So, hopefully that makes a little sense. We'll get more into it. It's not something simple that folks can do because it takes a mindset to be in both directions at one time. But I've done enough of it now and always end up with a profit. And that's what the banks do. The banks will enter 10 million here to drop it. They'll enter 20 million here to go up. They'll cut their losses, and then they'll end up taking this higher and make the profit from here to here, even though they lost on this trade here. So if that makes sense, let me know, in the comments as well, just to know. Okay, now I'm going to kind of talk about, and I'm going to show you something pretty cool. And if you follow this and you are, what I want to say, and you are accountable, then it's over. Like game over, you've got it. Okay, if you can follow this. Not everyone can follow this, because at the very beginning, it's so simple that you want to get more. Your psychology will tell you, well, I want to get more. I'm having a good day. I want to go for more. If you can work on your psychology, what I'm going to show you is the gateway to you telling me in 2 years or 3 years, hey, Armando, wow, I just made X amount of money inside of the market. Okay. For crude oil, I'm trading. See, any thoughts? Let me get to this question real quick for crude oil. So yeah, you're trading the crude oil. And remind me, I'm going to be doing more stuff in my futures here coming up. So CL, is that kind of like the mini, or is that the full lot size? So it would work kind of the same, but the problem is with futures, you cannot hedge. So I have think or swim. I can only buy or sell in one direction. I can't have a buy and a sell. It'll close out your trade. Okay, that's the problem with the futures. That's why any hedging, you really should do it with an international broker, like with my broker Coinex, for example, because you could have buys and sells. In the futures, at least with Think or Swim, which used to be TD Ameritrade, now it's Charles Schwab, you can only go in one direction. So you cannot do that. Okay, you cannot do that. Yep, and no worries, don't worries. So Alex, let me know if that's what you were asking, but you cannot hedge with futures for the most part. Maybe there's a platform that allows you, but with the one that I know, which is Thinkorswim, you cannot. It's a full. Okay. Yeah. Let me know in the comments what your broker is. If it's Thinkorswim, I know you can't, but maybe you use TradeStation or one of those other ones. Maybe they do allow you to, but I know for most futures, you can. You have to be in one direction or the other when it comes to that. And yeah, that's a great example. I was just going to get to that. He hit it, right? So now you could have multiple accounts. Okay. So, what I used to do back in the day when I was heavy futures, and the reason why I stopped futures for a while, because I was getting killed on the tax side of futures inside of a U.S. broker, was have multiple accounts. One is your buying account. One is your selling account. There's a lot of folks that I know that, yeah, you're welcome. There's a lot of folks that I know who have one account for indices. They have one account just to trade gold. They have one account just to trade crude oil. So that isn't a bad thing to do if you can manage your account switching from one account to the other, because then they can kind of go back and do an analysis of their trades, and they know that this account is just crude oil. But that's a great suggestion there. Open 2 accounts, right? Split your profits and do one for buying and one for selling. Then you'll always be hedging, and you'll be making money on one account versus the other. Then you're up 200, but you're down 50. You close out to 50. You're still up 150 because you hedged in both directions. So that's actually a pretty good idea, as well. Okay. I think they trade commodities via Forex pairs, correct? Yeah. During Forex. Yeah, definitely on the Forex side right now. I'm doing nothing on the futures side right now. Okay. So before we wrap up this session, what I'm going to show you now is going to be the gateway. So pay attention. I am going to be dropping this link. Control copy. I'm going to be dropping this link here so you can have it in the chat. Okay. So I'm going to go full screen and then watch this, and then we're going to wrap it up. So you can enjoy your Saturday, and we can enjoy your Saturday. Okay. Now there's plenty of these others out there. This is the one I like because then I can print it and I keep this next to my desk. Let's go ahead and put in, and I want to do this for everyone as well. I'm going to do 2 examples. I'm going to do a $200 account, which most people have shoes more expensive than that, so you can afford that. And then I'll do a couple of thousand as well. Okay. We're not going to worry about obviously we're going to do currency, US dollars, but if you have to do euros or another currency, you can definitely do that, as well. Okay. My goal, okay. And again, some of you may say that's too conservative. My goal has always been 1% a day, if you can do it, right? But I'm going to go daily. Okay. I'm going to go daily. Okay. So I'm going to go put at 1%. You can change this to whatever you want, but I'm going to do very, very conservative because when you see this, you're going to be like, wow. Okay. At only 1%. Okay. You can do 0.5, and I'm going to do 1. Now I'm going to put here 2 years, right? And the reason why I'm going to put here 2 years is very simple. For those of you that are in the United States, right, the goal is always that we send kids away to college for 4 years so they can get their college degree, right? So we expect them in 4 years to come back with a piece of paper saying they graduated from XYZ school with XYZ background, right? So I'm going to put 2 years here. I'm going to cut that in half because you got to give yourself time to learn this and do it right, okay? So I'm going to put 2 years. I'm going to put 2 years starting today. We're going to do 2 years. No months. Now, all the days of the week, nope, we're not going to do all the days of the week. We're just going to go Monday through Friday. That's it. Okay. When we shouldn't be trading Sunday when the market opens, that's like extra. We're just going to do Monday through Friday. Okay. And if you want to cut it down to 4 days, you can do 4 days. You can do 5 days. That's it. Okay. We're not going to deposit any extra money, and we're going to start today. Okay. And then we're going to click on this little calculate button. Okay. We're going to click on this calculate button. Now, this is first going to give you a monthly breakdown. I don't want a monthly breakdown. I want to see what your goals need to be daily. And this is what gets people to say, oh, man, Armando, I want to keep doing more. I want to keep doing more. And I'm going to be doing a full YouTube video on this as well. So you're going to start with $200 in this example, right? And let's say that Monday comes around. Your goal is 1%. Well, 1% of 200 is that you make $2 in your account. And when you hit $2, you stop trading for the day. Okay. You stop trading for the day. Let me say that again. When you hit $2, you stop trading for the day. This is a 2-year plan, and it will work for you if you follow the rules. Okay. If you follow the rules. So now your account is at $202. Now on Tuesday, you're going to make $2.02. Your account, you've earned now $4.02, and your account is at 204. So you're going to do this every day. You're only going to have small days at the beginning. But again, we're only risking 1%. So it's not a big deal. And I'm going to show you why. So at the end of year 1, okay, let me go to the end of year 1, okay, which is going to be here, September. We're already pretty much in September. Okay, let's go over to late July, where we are now. Okay. Your account, let's say it's here. Your account's at 2,000. Okay. 2,000. Now we're at the end of year 1, and we went from 200 to 2,000. That is a hell of a margin, meaning this is what people lose focus on. Don't worry about the dollar amount. Worry about your return on your investment, the growth, the percentage. That's what you should be focused on at every level. The percentage, not the dollar amount, right? I have a buddy of mine who's been doing this, who went full-time. He was a police officer, did this full-time, 6-figure trader now as well. And he says he'll never tell you, oh, I made X amount of money today. What he'll tell you is, oh, I made 2%. Oh, I made 0.5%. Oh, I made 1%. Focus on the percentage, right? If in 1 year you can take 200 to 2,000, you're not going to get that raise at work. You go to your job today and ask them if they're going to give you an $1,800 pay raise in 1 year. And then you come back and tell me what they tell you, for the most part, right? You go back and you say that. Does that make sense? Right? So now we go out on this $200 account, and we're going to go out 2 years. Okay. So we are going to go out 2 years, and we are going to be, sorry about that, I fast forwarded. Okay. We took this account to roughly $36,000. Now, here's the beauty about that. Let's say that you failed, right? Let's say that you failed on 50% of your trades. You are a 50% trader. I'm going to make this big so you can see it. You are a 50% trader, meaning you lost half of your trades, right? Even if you ended up, and let's go more than 50, let's go 70%, right? You're bad. Candles are going up and you're putting sell. Candles are going down and you're hitting buy, right? You just win 20, 30% of your trades. Let's say you knock this down to 10,000. You took 200 to 10,000 and you were a bad trader in your first year, but you followed the rules of just 1%. Just 1%. 1%. right? You lost more trades than you won. You got 10,000. Okay. Well, I don't know about you, but 10,000 would be a lot of money for a lot of people, right? So now what you do is let's take that same scenario. You took 200 to 10. We're only going to say 10. Again, very, very conservative, right? Very, very conservative. Yeah, appreciate it. Great tip on focus. Yep. Focus on the percentage, not the dollar amount. Focus on the percentage. Now we take 10,000 at the end of year 2. Okay. Yes. It took you 2 years to make 10,000. Again, are you getting that raise? Are you getting that raise at work? Will somebody tell me in the comments, are they going to give you an $1,800 or $2,000 raise at work each year? If this is all you do, maybe this account is just something on the side that you do versus trying to make full-time money for now, right? So now you're going to take your investment. The chart's at 36,000, but you were only able to make 10 because you had more bad days than good days, okay? And you're going to keep the exact same interest rate, 1%. We're going to do another 2-year plan. Remember, it takes 4 years to graduate college, and we'll do the exact same thing. And we're going to assume that we're starting this in 25, but we're just going to leave today's date. And we're going to click calculate. Now, I don't know about you, but this up here, and I'm going to go full screen. No, I am full screen. This right here is a lot of money, right? That is your potential. Now you look how your days change. When you've got $10,000 in an account, you should be having $100 days if that's all you do, right? If that's all you do, you should be closing that computer, putting away your phone, and that's it, because this is using the compound interest, right? We are compounding our accounts. So at the end of another 2 years, if you were only able to squeeze out, again, we're only getting 1% of the market. Most full-time traders try to get 5 to 6%. I think that's crazy, and I don't think that's sustainable, okay? Half to 1% is awesome for me, okay? That's all I look for. Look at this dollar amount. Let's say you fail by 75%. Does that still change you? Right? Does that still change you? Right? If you only do 80%, if you only do 20% of that, how good is that? Somebody tell me in the chat, if you can only do 10 to 20% of this right here, right, what would that do? What would that do? Right? What would that do? So again, absolutely, right? Yeah, you are not getting that pay raise at work. Absolutely not, right? Absolutely not. So, the focus here should be is to take this, and whether you want to start at 0.5%, I would recommend for the first 6 months, and again, this is the way it works for me, is you do not do anything more than 1%. Okay? And if you stick to it, this is how you grow a small account or even a large account. Okay? Because again, I told you I was going to give you 2 scenarios, and I gave you the year 3 and 4 of the $200 scenario. Now, if we're going to do most of you said you have this in your account and you do the exact same process, right? This is where you're at the end of 1 year. At the end of 2 years, right? You started here. This is your potential at the end of 2 years if you just do 1%. So you're saying you're going to be like, man, let me go full screen here for a minute. You're going to be like, man, Armando, I've got $1,000 in my account, and I'm only supposed to make $10 today, and then you want me to stop? The answer is yes. Because if you believe in this 2-year plan and you believe that you can do this daily, give you more time freedom to do the other things you enjoy in your life, then this is all you need to do daily. The first 5 days, this is all you're doing on a $1,000 account, because you're more concerned about this number. You're going to discipline yourself to have this number in 2 years, right? So this is all you're doing daily. You're just doing 1% because you are focused on this right here, okay? You are focused on this number right here. You're not focused in on these small numbers. These small numbers gets you here. But if you don't have these numbers at the beginning, you're more likely to blow your account, lose interest, quit, and not do this again, right? So again, that's the journey, right? Absolutely. And then inflation, don't listen to what you're hearing on inflation, right? To me, everyone should be learning how to trade to just deal with inflation. If anything, just to deal with inflation, right? My electricity bill this month went from my normal $330 to $540 this month. That's a $200 increase, right? I have another stream of income. They can charge me $1,000. I'm not worried about it. right? Because I have another stream of income just to deal with inflation, right? So you got to understand that you've got to do what's good for you, your family, and your situation. And so, these are real. So I've given you the calculator. We talked a little bit earlier about risk management. This section, actually, I love talking about it. We've been going for, 40 minutes now, because I think this has to be said early and shown realistically what you can do, right? Not put 5% in here, 10% in here, because the reality is you won't be able to do that daily, right? You won't be able to do it. Everyone can have a great week. You might even have a great month. You cannot sustain that 6-7 years later. This is sustainable. Half to 1% is sustainable. I know a couple of guys that manage $1 million funds, and they just look for 1% a month. Because think about it, if you have $1 million and you can only pull out 1% a month, you're living comfortably, right? And that's the return for their owners. So again, this I think is a great plan to start. And let me just even show you how, if you take this exact same plan and you ask yourself, hey, I just want to be even more conservative. You just want to do 0.5, right? $1,000. So again, are you going to get that raise? Are you going to get a $12,000 raise over the next 2 years at your job if you only trade at 0.5%? So now your days become easier. Look at your first day, $5 off this $1,000. Oh, let me go full screen. $5. That's all you have to do on a $1,000 account. But your psyche's going to tell you, let me go in. I did that in 2 minutes. Let me go in and get another trade. Then you lose that one. Then you lose the next one. Next thing you know, now you're working upstream to hit these numbers to try to make it back. And if you revenge trade, we all know what happens when you revenge trade. Usually you end up losing even more, right? But these are very attainable, soft numbers where you can take this and make it this in 2 years with no stress trading. Again, that is a lot of money. $12,000 is a lot of money. You can do that. That pays almost for a year of college here in the States, right? That helps out with going on a super nice vacation for your parents or whatever the case may be. So, hopefully today this kind of crossed into mindset, and this is going to lead into us creating a trading plan. What is your percentage per day? What pairs are you going to trade? And only sticking to those pairs that you want to trade. Give me a second. Right? Only sticking to those pairs that you want to trade. You shouldn't be trading 28 pairs. You should master 3 to 5. So when the first 2 are not set up, there's going to be always one good setup, right? No more than 5. You should not be mastering more than 5. If you can knock it down to 3, right? I have my core 3. There's always going to be a setup. You may have to be a little patient, but there's going to be a setup. So hopefully today you got a little bit of value on here when it comes to looking at the risk. Again, 0.01 for every 100, 1.0 to about 3.0 max on 1,000 or more. If you're on the future side, again, looking at your contracts, same rule of thumb. One contract obviously can't really hedge there. Open multiple accounts, and then I just gave you a link that you can put in these projections for you, and you can make them work for you. And there's tons of other calculators. Just this is the one that I've been using for a while because then I can print it and I have it close to me where I have it to know what my daily goals are in some of those cases on the multiple accounts. So hopefully you got some value today. If you did, awesome. Again, these videos are private. They'll be stored in the members area only. But again, feel free to, share this page with others. Let's try to build a strong community here. Because at the end of the day, if we have 100, 200 people looking at charts, reviewing charts, feel free in the Telegram to say, hey, I'm looking at this, right? I am not the guru. I am not the perfectionist, right? I need you to say, hey, look at this, because I may not be looking at it, right? So if we can help each other, that's awesome, right? So again, feel free. And again, anytime I put a video out, the only thing I ask, if you can do a little extra help, is definitely like that video, comment on the video, because we all know that's the way the YouTube algorithm works. And maybe we can get more people who are struggling to come in here for a few bucks a month and be able to get some value for mindset trading and just help folks out the right way. Okay. Yep, I appreciate it. Again, you go find somebody else who's going to be doing this for 45 minutes on a Saturday. Family is ready to do some stuff for the pocket change that you're being charged. But again, I love it, and that's why I'm here. All right, have a great weekend. Later today, I'll be doing my Sunday crude oil analysis, so definitely check that out, and I will post that in all of our different communication channels as well. Okay, appreciate you watching. Have a good weekend.